And one of the hardest things for an investor to do is to know when to sell. Tim Kane is a behavioral economist and J.P. Conte Fellow at the Hoover Institution at Stanford University. And we're delighted you could come back and join us, sir. We had so much fun last week with you. Before we get to the question of how to know when to sell, let me ask you whether we are at danger of turning a health pandemic into an economic pandemic. Are we talking ourselves into worse trouble than we should?
I think so. I think there are a lot of skeptics out there, too, watching Tyler that realize, well, shoot, if it's a panic, all right, let's dance. But this is also going to be a week where the self-fulfilling recession is going to be exposed to a lot of sunlight. I mean, we're going to learn a lot this week. The scientists have been busy. I'm sure you followed over the weekend. We're learning more and more about fatality rates and spread rates. And basically, the world might be able to kill this thing if we stop shaking hands and we just, shift to fist bumps. We're going to be able to slow down the spread, but we're going to learn so much. And I think that's going to have a real calming effect, literally by this coming Friday. And so I'd be poised for buying opportunities. I'm not a professional investor either. I just think there are such good opportunities to take advantage of the panic selling.
A lot of the selling, frankly, is done by algorithmic trading. In fact, I would wager that the majority has been. But it is also true that I think human beings, being generally optimistic creatures, have a kind of, and because of what they read and hear and they listen to Warren Buffett, they have an upward bias. So it's easy to buy, but hard to sell. Right?
I was thinking a lot about Warren Buffett. Well, sometimes it's easy to sell, right? I think people might say, gosh, if my mutual fund's not doing this, I'm going to pull out of the mutual. I'm going to shift to gold or something. But Warren Buffett teaches us again and again, and here's a pretty successful guy, think long term, right? I mean, this virus may be with us for a year or two, but people are going to start building up antibodies. The fatality rate is going to drop to be something like a flu or even milder than a flu. And man, those tech opportunities are real. Those are long-term investments. If anything, the low interest rates right now are opening up real estate investment opportunities. So I think if you think long-term, you're absolutely on the right track because this shall pass.
I don't dispute that at all, but let's turn back to the question of selling. When you've bought something and you've owned it for a long time and it has loved you, you've made money with it, it is hard to say goodbye to a stock that you've loved or a fund that has loved you back. And now you have to learn how to trust yourself when it's time to sell. How do you learn to trust yourself that it's time to say goodbye?
If it's time to say goodbye, I would think about it the same way that we learned about dollar cost averaging going in. Maybe dollar cost average a little bit going out. Don't sell everything. If you feel the need, scale that. Take a step at a time. So you're hedging a little bit on the risk side. But I would push back. I remember 20 years ago when people said about Microsoft, well, gosh, it grew so much here in 1999 that it's all done. But no, that was a real investment. It was a long-term investment. I'd say the same thing about Amazon. I still think it's a buy stock, but I'm a big believer in tech and how it's transforming our economy. So think long-term. If you're younger than 50, definitely think long-term.